Hello, everyone. Welcome to VRIC Media, your most trusted voice in metals and mining. I'm your host, Darrell Thomas, and today we have the pleasure of interviewing Todd Bubba Horwitz of Bubba Trading. How you doing today, Bubba?
Darrell, it's always great to be with you and glad to be back. Lots going on in a very quiet and crappy market, but a lot of things are going on.
Yeah, for sure. So gold has breached $4,000 an ounce on the futures. And so I want to start there. So what's your perspective on where gold is headed? What are the main drivers that you're seeing in this price rise and such? And so let's start there.
Well, I think there's a lot of panic buying gold right now. I think the central bank started out by buying gold because of the weakness in the currencies. And we finally got to that magic number of 4,000. But I think now you're getting a little bit too much exuberance in here. I'm a big fan of gold, and I think that everybody should own some, but I would expect to see some selling. But I think the high price tells you what? It tells you that inflation is going higher. The Fed rate cut was no good. Okay. Again, we can hear all we want about how great rate cuts are and how they're good for the markets, but for the mass population, for the middle class, rate cuts don't do you any good because we don't get the benefit of the rate cut. They don't pass the rate cuts on. The banks aren't entitled to pass the rate cuts on, so we have higher inflation. That's your uptick in gold and in silver and in platinum, as a matter of fact. Those are inflation plays right now, and they're continuing to just go higher. So I would assume, and I can see when I go to the store, inflation is getting higher. So I think gold is great. I think you should own it, and not in paper, not in the futures market. You trade the paper, you trade the futures market, but if you really want to be an investor in gold, you own the physical metal.
Yeah, so that's definitely two different sides of the coin. Obviously, preserving your purchasing power, passing on wealth to your kids or whatever the case may be in the physical. But then when you are engaging in the stocks, some of the folks that I've been talking to have been taking some of those profits off the table and such as they've rolled these prices up, especially in some of the junior equities and such. And so what are you doing? Like, how are you positioning yourself in this precious metals bull market?
Well, I own gold. I've always been a buyer of gold. I buy it all the time. Physical, but I do trade the futures market. I do trade the equities, and the equity golds that I own, I hedge everything, Darrell. I have a program that I actually teach, but I have a program that I can hedge, so I never get out. I'll just buy more paper on a sell-off. I'll buy more, and I'll continue to accumulate because one of the things I know about the equity market is that equities go up 8.5% year over year and have done so in history. So why would I want to get out? The only time I would ever get out is something fundamentally change. And I don't think in gold or in silver that it's going to fundamentally change. So why not stay in it and protect it? Because we can see, back in the day, gold was $80 an ounce. Then it was $200. Then it was $400. And there was nobody wanted to buy it when it was there. Now at 4,000, they're going crazy and trying to line up and buy it now.
Yeah, for sure. So obviously the last bull run, it lasted a little over 10 years or somewhere around there. And so we've been in a bull run, I would argue, since probably 2020 or maybe a little bit before that and such. And so how much longer do you think we have of this? Do you think gold is going to go up indefinitely, looking at like inflation, debt deficits? National debts around the world, global debt is just ballooning and such. And so just want to get your perspective there.
Well, listen, I don't think any market can continue to go up at the pace that gold's going up. I would expect to see a pullback. And listen, honestly, I sold as a trade at 4,000 overnight. And of course, I covered it. I had to stop working and I covered it and took some small profits. Listen, I think there's going to be a pullback here. Again, when is it going to come? That I can't answer. But certainly, if I was putting new money to work right this minute, I would not be buying gold right this second. I would be more of a seller from a trader's point of view. If I'm an investor, what do I pay? Does it matter if I'm going to hold it for the next 10 years? If I'm going to hold it for the next 20 years, if I'm going to hold it for my family, then I'm really not worried about where I buy it. So I could buy some. If I were going to step in now, I'd be a scaled buyer, maybe buy a little bit here, even though I think it's way overbought, but you can buy a little bit here because what you don't want to do is you don't want to get into the position where I should have, right? The name of my company, the holding company of my company is shoulda, woulda, coulda. Okay. And at the end of the day, you don't want to have the should have. So you can make a small investment and buy here and then scale down if it does go down. And I do believe it will go down. I think that, again, I'm not negative. I just think in natural markets, when you look at them, Markets go up, they go down, and when they get too parabolically higher, which I think you're seeing now, I mean, we've gone up in the last 2 weeks about 400, almost over 10%. Markets don't move like that. So I expect a little bit of a pullback here. But again, you have to define, am I trading or am I investing? If I'm trading, I'm looking to short it and I want to sell it. Okay. And I have to protect myself. So I have to know where I'm going to exit. But if I'm investing, wherever I buy it, I buy it. I can hedge physical metals too using derivatives. So there's a way to protect that investment if I choose to do so.
Okay, gotcha. So what's your perspective on price targets? So Goldman Sachs had put out a price target for 2025 of 4,000. We've hit that price target. And then they just came out and put out a price target for 2026 of 4,900 and between 4,900 and 5,000. And so obviously that's like another year away or whatnot. What's your perspective on those price targets?
Darrell, I'm not a big price target guy, but because to me everything's got to break through the next level. But I could certainly see 5,000. I could see another 25% move higher. Again, the economy is in weak shape. We've got a lot of problems, and there's a lot of money out there, not from the little guys, not from the middle class guys, but from the wealthier that are going to look to put their money to work in a safer investment and a hedge against inflation. So I could see gold going to 5,000. I mean, I thought silver would get to $50 this year. So we're pretty close right now. And again, I was on target at 4,000 as well. And I think 5,000 is a realistic target. I think more likely is 4,500, 4,600, but certainly I could see 5,000 showing up.
Yeah. And so there's been multiple of these hedge funds, BlackRock, Morgan Stanley's chief investment officer came out and said, recommends a 20% allocation to gold and such. And so, and there was a recent report from the World Gold Council that shows like these continued record inflows of the gold ETFs and such. And so, as you mentioned earlier, like now a lot of buyers are coming to the table and such. And so I'm kind of wondering, are people getting this gold fever and if that's going to continue to drive the price higher as the demand continues to come in? But I mean, obviously as a disciplined investor, you want to hedge that risk and not lose those paper gains,
Right. Well, again, and that's what I would be doing because, again, if we go back to the last bull market in gold, if you remember, they started opening up the gold stores, right? Every street corner had a gold store. And what happened? Gold collapsed. I mean, listen, it came back. But again, remember, people who buy, they get nervous and they panic, which is what traders like me and whoever trades the market benefit off of is when people panic. I think gold is very frothy up here. Again, I'm a big fan, and I think a year from now, it'll be higher than it is right now. But between now and then, does it go back to 3,500? And if you buy it at 4,000, can you stomach the drop to 3,500? Can you stomach the drop to 3,200? I'm not saying it's going there, but again, when you invest your hard-earned money into the market, can you take the pressure when things don't go your way? And you've been watching long enough, you and I have been watching long enough, that markets always have reasons to shake the trees and shake the people out, shake the investor out. So that's the question you have to ask for. That's why you have to be very careful on how much leverage you're going to use. If you're going to go into the paper market of gold, you got to be careful how much leverage you use, because leverage, when it's going in your favor, is a great tool, but when it's going against you, it could be disastrous. Yeah,
for sure. So what's your perspective on, so obviously, I mean, if gold goes back to 3,200, I'm buying. But what's your perspective on, some people would say, okay, they're waiting for the crash. Like many folks have been waiting for the correction or the crash since gold was at 2,600 or 2,300, waiting on gold to go back to 1,800 or so and such. And so, I mean, it seems like many of those folks that may have operated with that mindset of thinking that we're going to have a correction, a serious correction in the near term, missed out on some opportunity and such. And so what's your perspective there?
I think people are foolish when they do that. I think there's still people waiting for the equity market to correct from 2009. Okay. From the rally we've seen. Now they're still sitting on cash trying to get into the market 16 years later in a 300 or 400% move, right? I think you have to learn to be a scaled buyer. Okay. Again, you have to have some representation. Sitting on cash is losing money, right? Even if you're in a CD. Even if you're in a CD right now, the CD rate's at, let's say, 5%, you're really not making any money at 5% because at the end of the day, by the time you pay the taxes on the gains, you've given up to 5%. I think you have to be a scaled buyer. I think you have to be in. I'm not saying you to load the boat up here. I'm saying that we can't time the market. That is the bottom line. If you're going to be an investor, and again, there's a big difference between investing and trading. If you're going to be an investor and you have money to burn or money to put in the market, then you should be buying some right now. I'm not saying shoot the whole load right now. I'm saying you need to buy some. So if it does keep going up, now again, we know it'll come down at some point, but at what point will it come down and how deep will the sellout be when it finally comes? And furthermore, if it gets down to 3,500, the price you've been waiting for, you'll say, will you be able to buy it? Because you know how the emotions of people change. They say, oh, I don't want to buy it now. It's going down, right? You want to buy into strength. You want to sell into weakness. That's what you have to remember.
Mm-hmm. Gotcha. Okay, so let's pivot to silver. Silver's been at 48, 49. It was above 49 for a little bit, I think, on the futures and such. And so just want to get your perspective there. I mean, the inflation adjusted target for silver would be, I believe, above $200 an ounce if you factor it in based on the all-time high back in the 70s, 80s and such. And so do you think we still got room to run in the silver bull run? I
do. I think we'll see 50 before the year's over. And I think you can look for probably another 20% move next year. Again, these are things that, we've been waiting for. And silver was in such a lull for so long, and now it's finally starting to move, and you're seeing some pretty solid action. So I would certainly see and expect this to run, and that's another metal I would continue to buy. And again, for those who buy it, buy scrap. Don't look to buy the fancy coins like you do in gold. Buy scrap because it's a better value, and you're only selling it on weight anyways. You're not looking for decoration; you're looking for money. So I think that I think you accumulate gold, silver, and platinum. I think platinum's a hell of a value right in here and now as well.
Yeah. Let's get to platinum here shortly. But I actually lost quite a bit of money on some of those fancy silver coins back in a couple years ago when I went to go sell, and they're like, "Yeah, we're not offering you the premium you paid for that. We don't care about that Spider-Man coin or whatever." So, definitely those are some of the pitfalls that can definitely trap newer investors.
But yeah, I mean, again, they sell it. They get to sell it at a premium, so they're not working off a really true spot. They're adding on for the decoration. Again, there's no point to owning. The reason you're buying precious metals is you're buying them to protect against inflation. You're buying them for growth. You're buying them for your future. You're buying them to accumulate some wealth. Okay? There's no reason for artistic design when you're accumulating wealth. I just bought 2,000 ounces of quarters. Okay. Of old pre-1964 quarters. Why? Because I'm only buying it for weight. Because if I want to sell it, now I'll never sell it. But my kids, the minute I drop, they'll sell it right away. But at the end of the day, that's what you want to remember when you're buying. You don't want to pay for artistic. You're buying protection. You're buying an investment, not something that you're going to display in a case trying to show these fancy coins you have. You throw them in your safe deposit box.
Yeah, for sure.
Timing's everything in this business. We've seen commodity prices really move up. The copper price, that started to move up strongly. We're not far off all-time highs, although you wouldn't know it from the junior sector and copper companies in general. But I think over the next year or two, we're going to see that really correct to the upside, and you're going to see a lot of money come into the sectors. Vizsla Copper, we're the team that brought you successes including ISO Energy and Vizsla Silver. If you want to learn more, you can find us at vizslacopper.com.
Yeah, so my perspective on silver, I want you to reality test this plan with me. So my perspective is when silver hits 60, 70, $80 an ounce, I'm assuming it will hit triple digits, but I mean, wait, time will tell. But once it gets to those ranges, I'm planning on, selling like my American Silver Eagles and all of those different coins. But I'm going to keep the constitutional silver, the the pre-1964s for, if mayhem ensues or we have some type of collapse or whatever, like, okay, I'll use that for my barter, but I'm going to be selling these kangaroos, these Krugerrands, and these American Silver Eagles, Libertads, all of that stuff when we get to like $70-$80 or whatever the case may be. So what you think about that plan?
I think it's a good plan. I mean, personally, if it were me, I would liquidate those when you get up to those prices, but I'd probably replace it back with the constitutional silver, as you call it. Okay. Mm-hmm. But again, listen, there's no problem with, or no thing about taking a profit, right? You made a lot of money on them. You can take the money and you put it in, but where are you going to put it when you get it? That's the question is, what is your intention to do with the money when you get it? You're not putting it in your mattress. You're going to put it into something else. So that, where am I going to put the money I'm going to take here? That's the question you have to ask yourself.
Yeah, for sure. So you mentioned that platinum is still a good value at its current prices and such. And so what's your outlook there on platinum?
Well, I think platinum is going to overtake gold again at some point. If most don't remember because they're not old enough, but platinum was at one time almost double gold. Okay. And now it's come back. It's about half of gold right now. A little bit more, a little bit less than half. It's about 40% of what gold is right now. Platinum is not only a great metal, but it's also industrial metal. It's only going to be used more. So I think that I expect platinum to continue to skyrocket. Now, certainly the 60 or so % move it's had this year is a little bit much, and I would expect a little bit of a pullback. But I think if I look at the three, platinum's on sale. Okay. Mm-hmm. And I think platinum has the biggest legs for the biggest run. And again, it wouldn't preclude me. I'd still buy gold. I'd still buy silver, but I would buy an equal amount of platinum at the same time.
Okay, yeah, I do remember when platinum was worth more than gold. You had a lot of the early 2000s hip hop artists and such. They pivoted from the big gold rope chains to like the platinum chains and stuff. And so like it was pretty hot back then. Yeah. And so, but thinking about platinum, I mean, platinum is obviously a smaller market cap than gold, and so I could see why that platinum could outperform it in price terms and such. Is that how you're looking at it? Because it's a smaller market cap?
It's got more usage too, right? It is an industrial metal, so it has a lot more usage that you could think about and things that would help you accumulate. That's again, you look at how fast can gold go up. Yeah, gold can go to 5,000. Gold can go to 6,000. Okay, but for my same dollar amount, can platinum go to 3,600? Okay. And which is double, okay? And I think the answer is yes. Now, am I right? I don't have any idea. But that's the way that I'm playing it. And that's the way that I own it. And that's when I buy it equal to. Okay, so if I'm going to buy $10,000 worth of gold, I'm going to buy $10,000 worth of platinum. And I think my platinum will outperform my gold.
Okay, gotcha. Any thoughts on palladium? So I've been buying some palladium as it's been a little more depressed. It's been a slower mover. Wondering if you got any perspective there. I
think palladium's great, but it's a very illiquid market. It's a very tough market. And the real problem that I have is where am I going to sell it when I need to sell it or when I want to sell it? Again, I think palladium's got, first of all, from a trading standpoint, it's very expensive. The margins are ridiculous. Okay. So I have no problem. I think palladium, if you remember, not long ago, palladium had some monster moves up before falling back a little bit. But I don't invest in it myself, but I can't blame you if you do. And I think it has a tremendous future, just like the rest. Again, it's just not something that I get overly involved with. Gotcha.
Okay, so let's go ahead and pivot to your outlook on the broader equity markets as well as the economy. So what are you seeing on that front?
Well, I think the economy's in trouble. I can't believe that people keep buying into that we're in great shape. When you look around, okay, you see the lack of jobs, the amount of homeless people, the amount of people that are massively involved in debt and paying usury rates on credit cards. Okay, look, I guess they're going to keep going until they stop. But this year, in 2025, bankruptcies are up 25%. Okay, from a year ago. That's not a good picture. The participation in the equity market is, we just came out of the slowest September. I've been trading for 47 years. We just came out of the slowest September I've ever seen. Okay. And October isn't off to such a big bang either. Okay. So again, when I look at it, I think the equities are in trouble. Now, again, full disclosure, I've thought that for a while. So it's not like I've been benefactor, but one of the things I will always tell everybody is when I'm investing, I never touch my investment. So I'm always, No matter what I'm doing from a trading standpoint, I'm always net long the market, and I'm always hedged. Okay, but I think the market's in for a lot of trouble here. I think it could be sooner rather than later. Certainly, I'm trying to be on the short side of the market right now from a trading standpoint. I think there's a lot of warning signs. You know, we haven't been this historically overbought since 87, 2001, or 2008. Take your choice. There's been so many warning signs that we continue to ignore, but that is very common in the world of investing because people don't think about it. They just, oh, it's going up, it's going up. And of course, every advisor is a genius in a bull market. So we just keep buying. And of course, every dip that comes in, well, one of these dips is not going to reach the previous high, and you're going to start to see some selling. And again, when is that going to happen? I really don't know. But it could be sooner rather than later. We're getting close to that time of year. You know, we've only had one real bad year in this time of year and during Christmas, which was Black Christmas of 2018. But certainly I could see an ugly finish this year, but I certainly wouldn't want anybody to go out and start shorting the market because that's what I'm saying now. I'm saying that's what I think, but I'm not. It does not preclude me from being long and staying in my equity positions. I don't like the way the market looks. I don't like the way it's acting. I don't like the lack of volume. I don't like the lack of participation. I don't like the lack of volatility. To me, those are all dramatic warning signs, not to mention the rest of the economy, the lack of jobs, and of course, AI is replacing guys my age. Well, maybe I'm a little bit too old because I'm past retirement age, but if you're between, let's say, 45 and 65 and you happen to lose your job, you're not getting that job back probably because it's going to be replaced by AI. That's a problem to me. That's going to create a much bigger problem because we're already talking about universal basic income in this country, and that's a disaster because that's just more burden on the taxpayer. Yeah,
that's a definitely a grim outlook. I mean, I would say, you know, I want to get your perspective on this because one of the aspects that I keep seeing driving the market higher, at least from a headline perspective, is the multiple deals happening in the AI sector. We did have Sam Altman come out and say that AI was in the bubble. Recently got the news that that OpenAI and AMD cut a deal together. AMD shoots up, $50 in a day or whatever the price was, and so and then you have the aspect of I think it was NVIDIA and Intel. Then you had the U.S. government and Intel as well, and so it seems like many of these stocks are hanging on for dear life until like you have some headline news about some type of deal or multi-billion-dollar deal in the making.
Well, I agree with you. Again, I don't know if you're old enough, but during the 90s, during the internet bubble, the original internet bubble, okay, this is what it was like. I mean, everything just went up. You buy anything in AI. I mean, look at some of these quantum stocks. I mean, they just balloon up like crazy. I mean, IONQ was $20, it's now $70. Rigetti was $8, now it's $46. I mean, these moves are unsustainable. Okay, and that's more of the warning signs that I'm talking about, because eventually that money dries up. Eventually, these companies have to make real money and make enough money to support the earnings and to support the stock price. And I don't think we're there. And those are the things that concern me. When you see an AMD go up 50% in one day, I mean, come on, really? But this is what goes on, and you have to be very careful because, again, I'm not saying don't participate, but again, they go down just as fast, if not faster. And during the 90s, many people who made all their money then lost at the end still had to pay a tax obligation on the money that they made. So it's a very tricky market right now. It's thin, and these AI stocks are ballooning like they were free, and we'll see what happens. But certainly, I would be very careful, and I would make sure I had some protection built in just in case.
Yeah, I mean, drawing parallels from the dot-com bubble. I mean, obviously, you had all of anything with a dot-com just shooting up in price, whether they provided value or had a web page up at that point or not. People were betting on that, right? And then now we're seeing, like AI data centers, for example, like many of these nuclear technology stocks have been skyrocketing, Oklo, some of these other ones, have been skyrocketing, but many of them haven't even got the infrastructure built yet to even start providing the energy or whatnot, and then let alone the uranium is going to need to to function, And so I've been kind of wondering about that. It seems like the market's front running and it's headline driven a lot. Even some of the rare earth companies, with the United States government, saying, hey, we're going to invest in this company. I think it was one recently, I forgot, it was Trilogy or something like that, that just went up super high, just started skyrocketing, because of that news. And it's like, okay, well, what is the company actually producing? Like, are they in production yet? Is the infrastructure built yet? Are they actually providing those products to the market yet and such? And so it seems like it's a lot of forward speculation going on in the markets right now.
Sounds familiar. It reminds me of 87. It reminds me of 2001. I mean, again, these all things remind me. These are the warning signs that I talk about, okay? You have companies that are exploding that aren't even really in business yet, but they're raising lots of money. And of course, we all know about costs. We all know about failure in business. I do like the uranium play. I have said, and I am on record saying that, if you're a climate change person, then the real solution is not wind, it's not solar, it's nuclear, which takes uranium. But at the end of the day, you have to watch. When these stocks get too far away, hey, you just have to miss it, because I assure you'll get another chance at it if you want. But to chase up something is just irresponsible from a investing standpoint when there's thousands of stocks to invest in, and you can find something similar that does the same thing that might even have a better performance when it's all said and done. And I think when you're investing, you want to make sure that the companies are in business and they make money. We can go back to, if you remember, Beyond Meats, which is obviously a little bit off topic, but that stock was $250. Now it's basically off the board. So, Tilray, a pot stock, was over $300. Now it's 55 cents. So you want to be careful about chasing anything up, any of these dreams up, because this is not a get-rich-quick scheme. It is a game that takes work and study, and you have to understand the fundamentals of a company. I'm not a fundamental trader, but when I buy something to own, as much as I don't have any love for Warren Buffett, he is right, and that is they still got to make money. The company still has to produce. And if they're not, I don't care what their stock price is today, it can't last.
Yeah, for sure. Yeah, you don't want to be the person left holding the bag in that situation too, so that's definitely important. So I want to get your perspective on oil and natural gas. So oil has been, many of the stocks have not been performing well. As well as natural gas is still pretty low. Many of the stocks are off the highs and such. And so just want to get your perspective there, because that's kind of where I'm looking at. It's like, okay, well, what could be the next move? Is oil the next move? Is natural gas the next move? Want to get your perspective there. I
think oil's the next move down. But again, that's just an opinion. I think you can see the weakness in the economy of what the oil markets are doing, right? We're down in the low 60s now. I think we're going into the low 50s, high 40s. I think oil is going much lower because, again, who's going to buy it? Where's the consumer? Where's those people who are buying that $100 steak, they still got to fill up their tank too. So I don't like crude oil at all here. I think it's got a chance to go back down. And again, certainly if we change, the jobs, the whole environment, the more working from home, the replacement of jobs takes demand away. We're seeing that same thing in some of the grain markets right now. But at the end of the day, I think oil is going lower. Natural gas is pretty inexpensive. And of course, if you're not aware, natural gas changes prices on a monthly basis in the futures market. And of course, it gets more expensive as we go into February, and then it starts to come down in price again. But certainly, if I could buy natural gas at $3, sure, I'd be a buyer. I think I was a buyer at $2.60 in the previous contract, and it had a nice move. And I'd like to be a buyer in natural gas. I think the risk versus the reward is much more in your favor than it is against you. So I'd definitely be a buyer in natural gas and a seller of crude. Yeah, gotcha. And so thinking about crude as if you're like a contrarian investor in terms of, obviously if, we go into a full-blown recession, which, there's many indicators that are saying we're there, and the crude price has been low and could go lower. Do you see oil making a comeback at some point if you're looking at it from a contrarian long-term investment perspective? A good question. I don't have a great answer for you, because I remember when crude was 11. Okay. before the big demand in the early 2000s, right? So I didn't think it could go much past 40, and of course it went to 140. There is an overabundance of oil in this country alone. Forget about globally. I mean, we have right now at current usage over a 200-year supply in the United States of America without going into the area they don't want to affect for the environment. But yes, could it go higher? Could it be a good investment? It could be a great investment. Okay, but I'm not willing to commit dollars into the crude market, especially based on the economy. Now you take crude back down into the 30s. Yeah, I'm a player. I'm a buyer. Maybe in the 40s, I'm a buyer. Up here in the 60s, I have no interest. There's other things I'd rather trade and put my money in.
Gotcha. Okay. Yeah. Appreciate that. So agriculture. There's many plays for agriculture. What are you seeing there? I'm not as well versed in agriculture stocks or whatnot, especially
you're well versed in everything, baby.
But but just want to get your perspective on agriculture.
Well, stagflation. You ever heard the term stagflation?
Yes.
That's what we got. Okay. You got loss of jobs, and the grain prices keep coming down, which again, food prices aren't coming down. So you have that mix where at the store they're going up, at the wholesale end they're going down. I believe that the grain markets are maybe one of the best buys ever right now. Okay. Corn at the $4 range, wheat at the $5 range. Again, you got to be willing to hold it, right? But this is where I play farmer, and I put the bins in my silos. I put I'm storing them. I'm like a bank account that I'm going to hold on to them. But I think that the grain markets are so oversold and so poorly done right now that I think that they have nothing but upside. I think your risk is not very much. Again, there always is risk, but I think your risk is very little to the potential gains you can make. But when we're in this stagflation period, which you are, I mean, they could linger here for a while. I mean, you'd have to go back to, the Jimmy Carter era of stagflation, and, commodity prices fall and inflation goes higher and only the consumer gets hurt. So, but I would definitely consider being a buyer. Listen, I like cotton, soybeans, wheat, corn. Those are, to me, are all valued plays here that you could buy. And if you have the wherewithal and the discipline to hold on to them, you could hold them.
Yeah, got it. Yeah, appreciate that. And then just one more commodity I want to chat with you, copper. I mean, obviously, if we're talking recession, copper is typically impacted in those type of environments. And so what's your perspective there?
I don't know. I cannot believe copper is back over $5 again. I can't believe it's on its way to $6 again. It doesn't make sense when you look at the housing market. I mean, where's the demand? Okay, now, one of the problems I have with copper is, China controls the copper market. Okay. China owns the London Metals Exchange, which is where copper is predominantly traded. Copper can be used as loan value to the banks in China. Okay, they can use this as a collateral. So you can sometimes get an artificial price. To me, logically, copper has no business being where it's at, but I'm certainly not going to tell anybody to fight the market and say, sell it here. But it's not logical. When housing is weak, we have an oversupply. It's only going to get worse. The economy is weak. Where's the demand from copper coming from? I just don't get it. So I choose not to trade it right now. But certainly if it gets back to $6, you can bet I'll be selling it there. Because again, I can see it only going lower, but I would not recommend anybody fighting into this market and saying, well, Bubba said that it's going down. I'm not saying it's going down from here. I'm telling you that if it gets to $6, I will be a seller. Right or wrong, I will sell at $6.
Yeah, thank you for that clarity. I'm sure you probably gotten some. I
just don't want people, I say things because I see things, and I might give you a level today, but that level today may not play tomorrow, right? Yeah. I make it clear when I do live webinars that I'm giving you a level now, but I really need to see how it acts at that level before I can actually commit, right? Again, interest rates are going up. Now, since the Fed cut rates, look what's happening in the 10-year. 10-year notes have gone higher, okay? Not the future, the interest rate. Okay, so where's the rate cut? And that's what people have to understand is that the Fed funds rate is what the banks borrow from the Federal Reserve at. They don't have to pass that savings on. So the banks are making more money right now because they work on a spread between what they borrow from the Federal Reserve at and what they lend it to you at. And their spread continues to get wider because they have not passed on the rate cuts to the consumer.
Yeah, definitely. Yeah, we especially seen that with the mortgage rates and such. They haven't moved much at all with the Fed rate cut. And so, what do you think about I mean, obviously, the Fed is looking to, there's some projections to cut about 100 basis points going into next year and such. And is that going to do anything for the markets at all? Like, what's your thoughts
Well, it'll
there?
probably continue to help the markets rally, which makes no sense. But again, you have to look who the participants are. The average guy in the street gets no benefit from a rate cut. Okay, yeah. All it does is create higher inflation. So really, if you take the middle class lower, it's penal for them because their prices go up. They don't borrow money anyways. If they do borrow money, they're not getting the same rate as somebody who's in the upper 1% or upper 10%. They get the rate from the bank because they know they can get paid back. So, like me, I mean, I don't have to mortgage my house, but I took a full mortgage because I got a 2.5% rate. So why I can make more than the 2.5%, but the average person can't do that. Okay. So I think that rate cuts are foolish. I happen to think it's a mistake. But of course, I think the Fed is nothing more than a cartel anyways that works for the banks. I'm not a fan of the Federal Reserve. We don't need the Federal Reserve. I think the cryptocurrency world is proving that we don't need the Federal Reserve. We don't need a central banking system that has no clue and doesn't follow the true free market, right? Asset classes will price themselves. And what is, in your opinion, Darrell, do you have a feel for what the true interest rate could be if they let the free market trade?
Shoot, I think it's going to be a lot higher.
Yeah, you're right. Okay, it's like about 10, 11%. Okay, and how do I know that? Because if you go to a lending institution, okay, even a bank, but if you go to the peer-to-peer lenders, Prosper, Cabbage, all those, your rate's going to be 15%. Okay, I mean, so again, they're not helping the average guy. Okay, and unfortunately, if you live in places like Los Angeles, or you live in New York, or you live in Chicago, if you're not making $150,000 a year, you're living in poverty. Okay, so again, I know that's a lot of money, but it's not a lot of money depending on where you live. I think that's a problem, and that's the Federal Reserve created that problem. And if you go back to 1985, an average house was $75,000. The average income was $25,000. Today, the average income is $70,000. The average house is $500,000. 7-to-1 versus 3-to-1. Something was wrong, and that's all based on what the Federal Reserve has done over the last 50 years.
Yeah. Well, case closed against the Fed. So, Bubba, appreciate you for coming on the show and everything. Where can people connect with some of your services? And I know you have some trading groups and you do some educational videos and such. And so, where can people connect with you?
They can go to BubbaTrading.com. You can also email me direct if you want at Bubba@BubbaTrading.com. I send out a daily update every morning. If you want that, just email me and I'll put you on the list. Every morning I shoot a 2-minute video just telling you what I think of what's going on during the day. And certainly you can check out what we do. Certainly love to have you. And, if you don't mind, for your audience, I've written 2 books on options trading. If anybody would like them, I would be happy to give them a PDF file of both books on how to trade options. All you'll do is have to email me at Bubba@BubbaTrading.com.
All right, I'll be sure to email you so I can get those books too. So everyone, be sure to go check out the resources that Bubba just pointed you to. Also, hit the subscribe button. Love to have your support, and click the link that is pinned in the comments. This is to our Vancouver Resource Investment Conference. Love to see you there. Thank you all for watching, and thank you for joining us today, Bubba.
Thanks, Darrell. It was great to be with you.